question is, will you bet on macro forecasts? Everybody makes macro forecasts. And yet, I don't believe that they are of any use. That's a mild exaggeration, but not so great. The truth of the matter is that most of the time, things continue as they are. So a forecast of extrapolation is correct most of the time. And most people share that view. Most people expect extrapolation. Extrapolation of the recent trends, the long-term trends, is incorporated in security prices. So when the extrapolation turns out to be correct, it's not a profitable expectation because everybody else had it as well. It was in the price you paid. The forecasts that are very profitable are the ones that call for radical deviation from trend, radical deviation from extrapolation. These are very significant when you make them and they're right. The trouble is they're not right very often because most of the time things are extrapolated. And so we have forecasts of extrapolation, which are usually correct but not profitable, and forecasts of deviation from trend, which are potentially very profitable but not often correct. I take that analysis to mean macro forecasting doesn't work. And when we started Oaktree 29 years ago this month, we sat down and we wrote out the things we had been doing, because we had the benefit of having worked together for 9 years already on average. And we have a very simple investment philosophy of 6 points, which governs everything we do. And number 5 says that our actions are not driven by macro forecasts. We are bottom-up investors selecting individual companies, not top-down selecting markets and countries. So that's a difference. We think we can get an advantage. By the way, where does outperforming come from? In short, it comes from having a knowledge advantage. And you have to know something better than most other people to outperform. Just trying is not going to help you if you don't know something they don't know. So we think we can get a knowledge advantage in studying the micro companies, industries, and securities, not the macro countries, markets, and rates, for example. So, we bar that from our approach. One of my heroes is John Kenneth Galbraith, who said we have 2 kinds of forecasters, the ones who don't know and the ones who don't know they don't know. And I've known for decades that I don't know. So I think we have an advantage in that. And then that kind of sounds like forecasting, macro forecasting is unavailing, but the truth is that it can be worse than neutral in its effect. It can be damaging in its effect. And I quote the American humorist and novelist Mark Twain, who said, "It ain't what you don't know that gets you into trouble. It's what you know for certain that just ain't true." No sentence that starts with, "I don't know, but," or "I could be wrong, but," ever got anybody into trouble. The ones that get you into trouble are the ones that say, "I'm sure that such and such," because if you believe something strongly and you bet on it heavily and you're wrong, that's how you get into big trouble. So will you bet on macro forecasting? This, in my opinion, is a critical and overarching decision. I wrote a memo a year and a half ago, I think it was October of 22, entitled "The Illusion of Knowledge." And it's basically a rant against macro forecasting, starting with a famous quote in each section. I think it's extremely important to decide, will you or won't you start from a top-down macro forecast? And most people do. Many people know they don't work. They do it anyway. And I quote somebody in there as saying that most people couldn't get out of bed in the morning if they admitted how uncertain the future is. And so I believe that macro forecasting, in my view, often takes the form of, can I say, organized religion. It gives something to believe in to dispel the great uncertainty present in the world they live in. I believe that very few people have the ability to do it in a superior fashion.
John Kenneth Galbraith, John Kenneth Galbraith, for those of you who are not familiar with ancient history, was an economist, American economist, died around '05, I think, maybe a little after, and at the age of about 98. And he was one of my favorites. He was a little on the left side. He was, somewhere between free enterprise and socialism, but he was what we call a liberal in the days when it was okay to say that word. But he was very, very smart, and he was not famous as an economist, but he played a lot of roles in government, and he was a diplomat. But he wrote some very good books, and one of them is called A Short History of Financial Euphoria. And I like thin books, and his is thin, especially the ones he wrote in the last decade or two of his life were very thin. So I enjoyed those. But the short history is very good, and I recommend that to you. And one of the things he says is we have two classes of forecasters, the ones who don't know and the ones who don't know they don't know. Now, I don't believe in forecasts, macro forecasts. People who forecast interest rates, performance of economies, performance of stock markets. And I don't think that my efforts to be a superior investor and most other people's are aided by macro forecasts. So am I saying that the forecaster is never right? No, I'm not saying that. The forecasters are often right. Last year, GDP grew 2%. Many forecasters forecast that GDP will grow this year at 2%. That's called extrapolation. And usually in economics, extrapolation works. Usually the future looks like the recent past. So usually the people who forecast a continuation of the current are right. The only problem is they don't make any money. Because let's take the economy. Most people forecast 2 something for this year. A growth rate of 2 something is cooked into the prices of securities today. If the growth rate turns out to be 2 something, everybody who forecasted that will be right, but security prices will not change much because that 2 something growth was anticipated and discounted a year or 2 ago. So all those people who are right won't make any money. Our forecast, so that's a correct. So most forecasts, extrapolation works all the time. Forecasts that are extrapolations work all the time, but they don't make any money. Logically, am I saying that forecasts never make any money? No. The forecasts that make money are the forecasts of radical change. If everybody's predicting 2.4% growth for this year, and if I predict -2, and it turns out to be -2, or I predict 6 and it turns out to be 6, I'll make a lot of money. So forecasts which are not extrapolations, forecasts which are radically different from the recent past, are potentially very valuable if they're correct. Of course, they're not of any value if they're incorrect. And if they're incorrect, they'll cost you a lot of money. If everybody else thinks it's going to be 2.4 and you predict 6 and it turns out at 2.4, you're probably going to have taken the wrong investments and lost a lot of money. So deviant forecasts, which turn out to be right, are potentially very valuable, but it's very hard to make them. It's very hard to make them correctly. It's very hard to make them correctly consistently. And somebody at lunch mentioned an early memo I wrote called The Value of Forecasts. And in one of, there was the value of forecasts, and then there was value of forecasts 2, I think, right? And in one of those, I reviewed the recent history of the Wall Street Journal poll. Every 6 months, the Wall Street Journal publishes the results of a poll of economists. And on GDP growth, CPI, value of a dollar, the price of oil, whatever it might be, a bunch of phenomena. They do it consistently. And they ask like 30 people consistently over time. And so It shows basically that most of the time when people get it right, it's because they predicted extrapolation and nothing changed. Once in a while, something changes radically, and invariably somebody predicted it. But the problem is, if you look at that person's other forecasts over the years, you see that that person always made radical forecasts and never was right any other time. So of course, if you're getting your information from a forecaster, the fact that he was right once doesn't tell you anything. You wouldn't, the views of that forecaster would not be of any value to you unless he was right consistently. And nobody's right consistently in making deviant forecasts. So the bottom line for me is that forecasting is not valuable. And that's something that my experience has told me. So we don't know what's going to happen, and randomness will play a big role in what happens. And randomness is by definition unpredictable.